Shares of Meta are soaring in after-hours trading. The stock up 11% as Meta announces its first ever quarterly dividend, boosts its buyback by $50 billion, and on top of all that, blockbuster guidance for the first quarter. Aaron Kessler, Seaport Global Analyst, and Scott Devitt, Wedbush Securities Managing Director, both joining me right now. I don't know if you guys are sharing my enthusiasm here, or it's just fascinating that we get these numbers, especially after the big tech disappointments of the past couple of days. Aaron, let's start with you. Just give me your sort of high-level Meta reaction here.
Yeah, results were strong. I'd say at the high end of the guidance for Q4. Not a big surprise. We think they guided a little bit conservative given kind of the October 7th events and just the uncertainty following that. But we saw some relatively strong results from Google and with YouTube. But I think the more important thing to your point was the strong guidance for Q1, got it essentially above the street for revenues for Q1. And then the dividend, obviously investors are going to like that, showing continued expense discipline on their part. And so I think investors are really more focused probably on the guidance and the dividend for Meta.
And what about you, Scott?
I would just add that they also kept their annual OPEX guide for 2024 equivalent to what they said last quarter, which is different than what Alphabet did in raising CapEx expectations. So when you think about the two stocks relatively now, the setup for the year, which is being priced into Meta, is just a lot more favorable for it versus Alphabet. The narrative on Alphabet is now that to address the search challenges that AI brings, it requires incremental cost in the business. And whereas with Meta, AI looks like it's more of a tailwind. So you get incremental growth from Meta. The multiples are relatively the same. And the cost structure at Meta is a bit more sound. At least that's the way it looks right now.
It is perhaps a bit more sound after the year that they have had where they sort of retrenched, but it looks like now there is a bit more investment that's going to be going on the part of Meta, right? Not just in returning cash to shareholders through the buyback and the dividend, but also making clear in the statement that they're willing to hire and expand in what they call higher cost technical roles because of that investment in AI, right? Scott, do you think that investors who at one time were not happy about that investment are going to be more understanding if they feel it's being, deployed in a reasonable way?
Yeah, well, I mean, this company's flipped the entire narrative. You had content issues, Cambridge Analytica, Apple IDFA, TikTok's going to kill Meta. It's now flipped to Reels has addressed Meta. Advantage Plus has addressed Apple's IDFA. The company's spending, losing $16 billion trying to find ways to generate revenue in this next AI cycle with AR, VR devices, AI smart glasses, Llama, the infusion of AI into the business. So it's become a growth story again overnight, and that's been the fuel behind the recovery in the stock. But this narrative has done a 180 in that window, and I think the move is justified. Before the move here after hours, you're looking at a stock that was trading around 22, 23 times current year earnings.
At the same time, it's so fascinating that we get this release on a day after the CEO of the company was effectively shamed into standing up and apologizing to parents because of mental health issues that his platform has allegedly caused. So, Aaron, what do you make of that sort of juxtaposition? And Meta does acknowledge in the statement here that there are regulatory headwinds.
Yeah, no, it's true. And they have taken steps to work with regulators. I think they put out a few things recently, specifically around Instagram and working with the regulator, with the government to kind of restrict certain types of content that teens see. So we all know these services can be very addictive, and we don't think that'll probably stop. But at the same time, Meta is taking actions to kind of alleviate some of those concerns for parents. And they have to do that. It could have some negative effect on kind of revenues. We're gonna obviously have kind of a wait and see, but one thing we will be focused on the earnings call will be any potential impact from the more restrictive content in terms of engagement with a younger audience.
Scott, is that a concern for you at all?
Well, I mean, at the moment, they're two separate topics. There
Hmm.
is what is social media's impact on society, which, if you ask my personal opinion, and I'd probably say it's a net negative. But the company exists. If not Meta, would be somebody else. They're putting the protections in place to do the best that they can as a company, and the financial, rewards for that are quite significant. It's a highly profitable, business approaching 40% margin, and becoming, the second most dominant, not becoming, it is the second most dominant advertising company in the world. So those questions are at times tied when it's affecting the business. I don't think the regulatory, construct or changes that are put in place around events like you were discussing from yesterday or anything else that's going on are really going to change the trajectory of growth at this point.
A moment to linger on the ads here for a second here, because the company talking about average price per ad up 2% year over year, and that impressions delivered across all of the Facebook or apps, or Meta apps, I should say, were up by 21%. Aaron, this seems to be a contrast with what we heard from Google, right? What is it that you think Meta is doing right on this front?
Yeah, I mean, it's often difficult to compare. A lot of times it's a mix shift or geographic kind of a big impact on that. I would say we've seen stronger results specifically on, I think Reels. You're starting to see better pricing. That came out very low in terms of pricing on Reels initially, and Reels pricing has gone up. And we think video pricing is going up overall for a lot of the platforms. So I think that's helped Instagram as well as Facebook. And you're getting easier comps as well on a year-over-year basis. So that's really helped pricing if you just look at it on a pure year-over-year basis.